Spotify, a very popular company, and how does its financial report look like in 2020 and how they affect its stock price? That's what we are going to dig in today. I will go through its financial reports and many key metrics, then analyze if it would eventually make profit in the near future. So Spotify, if you look at its stock price, it actually performed quite well in 2020. It rated a lot from 150 to 350. So that's like 200 points. It's almost a 200% increase in just a year. If you compare it to other tech companies, it's still impressive. But it won't be that surprising because 2020 is a year that tech stocks really got a lot of traction. But its fundamental aspect really can support such growth. I mean, can its value justify its price? Or is it actually worth that much? We really need to look into its financial report. So the first graph I'm showing you is the revenue. This is from 2015, 16, 17. So it's 2016, 2017, 18, 19, 20. So these 5 years, the revenues in these 5 years, and you can see it kind of increased very steadily, and the compound annual growth rate is 27%, almost 28%. So in terms of revenue, the growth, it's good. It's quite good. It's been very good. And this is in millions. So this revenue in 2020 is almost $8 billion US dollars. That's a lot of revenue. But the crucial is, can it actually reduce the cost and eventually make profit? That's what we want to look into. And this is the revenue breakdown. You can see the major revenue actually comes from premium. Premium member means you subscribe Spotify so that you don't have to watch any ads. You don't have to listen any ads. And that's premium. It's around $10 US dollars a month, if I'm not wrong, depending on which country you are located. But it's around that price. It's quite surprising that major, like 90% of its revenue come from premium. I guess like they even though they have a lot of ads, but ads couldn't make them a lot of money. And in terms of the number of premium users, I think it is just 10% of its total users. So it just tells us even they have 10 times more traffic for ad-supported products, which is the free product that you need to listen a lot of ads. It still couldn't make them money, and majority of the money come from premium. That tells me, I guess, personally guess the per users, the money that per user can generate for the premium users, they can generate 100 times more than free users. So that's just the brutal of a freemium model. Free users sometimes will give your products tremendous amount of cost. All right, so this is the growth. You can see the premium users actually increase quite steadily. The revenue from premium users and revenue from free users, just which is ad revenue, did not increase too much. Okay, so that's the total breakdown. And another graph that I want to show you is the cost of revenue, which means how much Spotify need to pay in order to get their revenue. And there are two categories. One is premium, another is ad-supported. So they pay more. It costs more for a premium member. Why? Because when premium members listen to songs, Spotify also need to pay certain amount of money to creators, to artists, because premium member pays Spotify's maybe let's say $10 a month. Then Spotify need to divide their profits to their artists. So that's where it's come from. So that's why you can see there are over $5 billion spent to the premium content as a cost. So it's just even you listen to the same song. They say you are a premium user, I'm a free user. We listen to let's say the one yesterday, this song yesterday, Beatles yesterday, and Spotify need to pay more money when you listen to it because you are a premium member. So that's what, and I'm a free member. They actually only share the ad profit to them. Ad profit is just not that much. So you can see these premium members, they cost more because it is a royalty fee. Okay, so the cost of premium members increased 29%, and the cost of a supporting member increased 32%. And another cost they added to the free supporting is actually podcast. Spotify spent a lot of money to acquire podcasts in 2020, and all the podcast costs actually are added to the ad-supported user, which is free user. So that's why there's a 32% jump, even more than the premium users. All right, because so far Spotify didn't really profit too much from its podcast. It just has one very simple model, which is ad models. Even you are premium users, you don't consider when you listen to this kind of podcast, Spotify don't need to pay the podcasters money because they already there's one-off buy. There's a exclusive contract. So it's not like when you listen to a song, they need to divide the profit they make from you. So here I want to show you Spotify's cost of revenue over the last 5 years. You can see from 2016 to 2020, the cost also increased quite steadily, like its revenue. And the cost of revenues compound growth rate is 23%. It's slightly lower than around 4 to 5% lower than the revenue. It's a good thing because it tells over time the cost will be significantly lower or much lower than the revenue. So it can open up the opportunity to make profits. But we couldn't know for sure if this is just a short-term trend or not. And 4-5% difference each year, it's actually not a lot. It takes maybe 10 more years to make the profit really, really significant. All right. So another graph I'm showing you now is the gross margin. The gross margin, there are two different you can see Spotify actually provides two kinds of products. One is premium products, which means for subscription users, and another is for ad-supported for free users. For free users, it actually is not making any sense. I would say it's like the gross margin. This is gross margin. It still doesn't subtract the operating cost. So it's just the gross margin, just 1% for ad-supported users. For the premium users, its gross margin it's okay, but not decent. It's not decent. It's 28%. For software company, the gross margin it's on average it should be 70%. But even for the premium users, you only have 28%. So consolidated one is 26%. Its general gross margin is 26%. And over the last 3 years, it did not improve too much. This is a warning for me because if you buy a Spotify stock, you expect its profits, its gross margin will improve over time because otherwise, how can it make money? And it did not show this kind of improvement over the last 3 years, and I would say even last 5 years, you cannot see any kind of improvement at all. So it's concerning. It's really, really concerning to consider this factor when you are doing your study. All right. So this is gross margin, gross profit, and the gross margin. Just like most company for freemium products, the free users actually costs a lot of money. All right, so this is research and development, which is R&D. If you are engineers in Spotify, it probably counts as your salary. And you can see the cost kind of increase also quite a lot. It's like from 2018 it's for almost like $500 million. In 2020 it's $800 million, and the percentage of the revenue increased from 9% to 11%. Not much fluctuations, around 10% for R&D. I would say this number is acceptable. And if you look at the net income, it's probably not a good signal for you, because the net income in 2016, 2017 is like negative quite a lot. This is in million. So in 2017, it lost more than $1 billion. $1 billion. That's a lot of money. In 2018, it drastically improved its profitability. Still negative, but at least it lost much less money. In 2019 as well. But in 2020, its revenue, its net income is like over $500 million negative. There's a lot of loss. The main reason I will conclude is because it bought a lot of podcasts. For example, the Joe Rogan Experience is a very expensive deal, $100 million, and a lot more like Michelle Obama exclusive, that kind of things. A lot of exclusive podcasts. It's a Spotify they are launching kind of attack in the podcast industry. You want to be the market dominant force in the podcast. So it's why it's kind of collecting so many different podcasts exclusively. So that's one thing to consider. So that's profitability just won't be too good. It's quite bad. But if you think it's a kind of good investment, you think the podcast market will become very, very promising and profitable in the future, maybe this won't be an issue for you to make your decision. Alright, this is EPS, which is similar trend. So now 2020, the EPS is minus around $3 per share, and don't forget its stock price now is over $300. It really need to make some profits in the next 5 years to justify their price. My concern is I don't know the drive. I didn't see the drive so far, the drive of revenue so far. Alright, so we have reached the end of today's video, and be aware of this video is just for you to reference. If you want to do any investment, please do your own research and your own due diligence. This video is not a recommendation for buying or selling any kind of stocks. Alright, so with that in mind, if you would like to receive more companies' financial analysis like this, don't forget to subscribe. Your subscription is really my greatest encouragement to make more videos like this. Other than that, enjoy your coffee, and I will see you next time.